The entire banking system was taking an unexpected nap. It's a scenario that feels like it belongs in a dystopian novel, but it's happening in real life. Yeah, that nightmare scenario has become a harsh reality for millions around the world. People are finding themselves unable to access their own money, leading to widespread frustration and panic. We're talking about a global wave of banking outages, leaving people stranded without access to their hard-earned cash. It's not just a minor inconvenience, it's a major disruption to daily life. From the United States to Japan, no corner of the globe seems immune to these digital blackouts. The interconnected nature of our financial systems means that a problem in one part of the world can quickly spread to others. This isn't just an inconvenience, it's a full-blown crisis exposing the fragility of our financial systems. When banks go dark, the ripple effects are felt far and wide. These outages are shaking our confidence in the stability of our financial institutions. We're left pointing fingers at everything from cyber attacks to good old-fashioned incompetence. The reasons behind these outages are varied and complex. Whatever the cause, one thing's for sure: when the banks stop working, the world as we know it grinds to a halt. The smooth functioning of our daily lives depends on these financial systems. Businesses can't process transactions, wages disappear into the digital ether, and people are left scrambling to buy their daily bread. The economic impact is immediate and severe. It's a stark reminder that in our increasingly digital world, our financial lives hang by a thread that seems to be getting thinner by the day. The more we rely on digital systems, the more vulnerable we become. The sheer scale of these outages is mind-boggling. It's not just a few isolated incidents, it's a widespread problem that affects millions. We're not talking about a few isolated incidents here. This is a systemic issue that requires urgent attention and action. This is a global phenomenon affecting millions of customers across continents. The impact is felt in both developed and developing countries, from major financial hubs like New York and London to developing economies in South America and Africa. The banking sector seems to be teetering on the brink. The consequences of these outages are far-reaching. This isn't just a technical glitch, it's a systemic failure that demands our attention. We need to understand the root causes and find solutions to prevent future occurrences. The question is, are we paying attention, or are we too busy refreshing our banking apps in the vain hope that our money has magically reappeared? It's time to take a hard look at the vulnerabilities in our financial systems. This isn't just about missed coffee dates and delayed rent payments, it's about the broader implications for our trust in financial institutions. This is about the erosion of trust in the very institutions we rely on to safeguard our financial well-being. When banks fail, the consequences are profound. When banks, the supposed guardians of our money, can't even keep their own systems running, it's time to ask some serious questions. Who's minding the store? What are the safeguards in place? What measures are being taken to prevent these outages? Are there robust systems in place to ensure continuity? And most importantly, why the hell does it feel like we're hurtling towards a cashless society held together by digital duct tape? The future of our financial security depends on addressing these critical issues now. Let's start with the good old US of A, the land of opportunity and apparently frequent banking outages. It's a place where dreams are made, but sometimes those dreams are interrupted by the harsh reality of technological failures. That time when a major US bank suffered a system meltdown that left millions of customers in the lurch for days, it was a nightmare scenario that no one saw coming, and it left a lasting impact on the trust people had in their financial institutions. Not exactly a shining moment for the American financial system. Analysts were baffled and customers were left in a state of confusion and frustration. People couldn't access their accounts, pay bills, or even withdraw cash from ATMs. It was a complete standstill, and the ripple effects were felt across the nation. It was like the financial equivalent of a nationwide power outage, except instead of darkness, we were plunged into a sea of economic uncertainty. Businesses couldn't operate, and individuals were left scrambling to find alternative solutions. And it wasn't just one bank. The problem was widespread, affecting multiple institutions and leaving a trail of chaos in its wake. Oh no, that would be far too simple. Instead, we had a domino effect, with one bank's issues leading to another's, creating a cascade of failures. We've had a whole parade of banking hiccups across the country, each incident adding to the growing sense of unease and distrust among the public. From regional banks to credit unions, no one seems immune to these technological terrors. It's a widespread issue that affects everyone, regardless of where they bank.
Imagine this. You're a small business owner, and suddenly you can't process credit card payments. Your livelihood is on the line, and there's nothing you can do about it. Your customers are left standing there, awkwardly clutching their wallets, while you're left sweating bullets, wondering if your business will survive the day. It's a scenario that no one wants to face, but it's becoming all too common. That's the reality for countless Americans who have fallen victim to these banking blackouts. It's a situation that leaves people feeling helpless and vulnerable.
But wait, there's more. The implications of these outages go far beyond mere inconvenience. These outages aren't just inconvenient, they're downright dangerous. They create a perfect storm for fraud and identity theft. When banking systems go down, it creates a prime opportunity for fraudsters and scammers to swoop in and take advantage of the chaos. They know that people are desperate and more likely to fall for their tricks. Imagine getting a phishing email that looks eerily legitimate, claiming there's been an issue with your account and asking for your login details. In the midst of a real outage, it's all too easy to fall for these scams, handing over your hard-earned money to digital thieves. In the midst of a real outage, it's all too easy to fall for these scams, handing over your hard-earned money to digital thieves. The emotional and financial toll can be devastating. The U.S. government, meanwhile, seems to be playing catch-up. Despite the growing number of incidents, there hasn't been a significant push to address the root causes. Sure, there are mutterings about cybersecurity and the need for more robust systems, but concrete action seems to be lagging behind the urgency of the situation. It's a problem that requires immediate attention, yet progress is slow. It's like watching a slow-motion train wreck, except the train is our financial system, and the passengers are all of us, holding our breath and hoping for the best. The stakes are incredibly high, and the margin for error is slim. The question is, how many more outages will it take before real change is implemented? How many more people need to suffer before we see a meaningful response? The clock is ticking, and the need for action has never been more urgent. Now we'll hop across the pond to the United Kingdom, where even the Queen isn't immune to the joys of banking outages. One of the UK's biggest banks experienced a system failure so epic that it made headlines around the world. Customers were locked out of their accounts, unable to make payments or receive wages. It was like the entire country had been transported back to the Dark Ages, except instead of relying on barter and trade, everyone was frantically refreshing their banking apps. And it wasn't just the UK. Down under in Australia and New Zealand, banks were also experiencing their fair share of digital meltdowns.
In New Zealand, a major bank suffered an outage that left customers stranded without access to their funds for hours. Imagine trying to buy groceries, only to find out that your bank account is essentially a black hole. That's the reality that many Kiwis faced during this technological nightmare.
These outages weren't just limited to individual banks. In the UK, a major payment processing system went down, causing chaos for millions of customers. Suddenly, debit cards were being declined left, right, and center. People couldn't pay for their morning commute, buy lunch, or even donate to their favorite charities. It was a stark reminder of just how reliant we've become on these invisible digital systems. The response from the UK and New Zealand governments was a mixed bag. There were calls for investigations, promises of stricter regulations, and a whole lot of finger-pointing.
But amidst all the political posturing, one thing was clear. The trust between banks and their customers had been shaken to its core. When people can't even rely on their banks to keep their money safe and accessible, it erodes confidence in the entire financial system.
We're taking a trip south to Mexico, where one of the country's largest banks experienced an unexpected outage that left millions of customers without access to their accounts. This sudden disruption caused widespread panic and confusion among the populace. People were unable to withdraw cash, make payments, or even check their balances. The inability to perform these basic financial transactions left many feeling helpless and frustrated. It was like a financial earthquake, shaking the foundations of the Mexican economy. The ripple effects were felt across various sectors, from retail to services, causing a significant slowdown in economic activities.
Small businesses were hit particularly hard. unable to process transactions or pay their employees. Many had to close their doors temporarily, leading to a loss of income and increased stress for business owners and their staff. The outage exposed the vulnerability of Mexico's financial infrastructure, highlighting the urgent need for greater investment in cybersecurity and system resilience. Experts called for immediate action to prevent such incidents in the future.
Meanwhile, in Venezuela, a country already grappling with hyperinflation and economic turmoil, a major bank suffered an outage that paralyzed the nation's already fragile financial system. This added another layer of complexity to an already dire situation. With cash in short supply and digital transactions increasingly common, the outage had a devastating impact on ordinary Venezuelans. Many found themselves unable to purchase essential goods and services. People were left struggling to buy basic necessities, with long lines forming at ATMs and supermarkets. The frustration and desperation were palpable as people tried to navigate the financial chaos. The outage underscored the precarious state of Venezuela's economy and the challenges faced by its citizens in accessing essential financial services. It was a stark reminder of the fragility of the country's financial infrastructure.
Over in South Africa, a series of outages plagued several banks, leaving customers frustrated and businesses struggling to cope. The repeated disruptions caused significant inconvenience and financial losses. The outages highlighted the country's dependence on a small number of major banks and raised concerns about the resilience of its financial system. There were calls for diversification and strengthening of the banking sector.
With digital transactions becoming increasingly common in South Africa, the outages served as a wake-up call for the need to strengthen cybersecurity measures and improve system redundancy. Ensuring the reliability of digital banking services became a top priority. Finally, let's travel to Japan, where even the technologically advanced nation wasn't immune to the global banking outage epidemic. The incident raised questions about the robustness of even the most advanced financial systems. One of Japan's largest banks experienced a major system failure, leaving millions of customers unable to access their accounts or make transactions. The disruption affected a wide range of services and caused significant inconvenience. The outage caused widespread disruption, affecting businesses, individuals, and even government services. The impact was felt across the country, highlighting the critical role of banking infrastructure in daily life. It highlighted the interconnected nature of modern financial systems and the potential for cascading failures when key components go down. The incident served as a stark reminder of the importance of maintaining robust and resilient financial networks.